Hi everyone, my name's Bernard Doyle, JBWere NZ Investment Strategist. Just a real quick update on some of the things we're watching in markets at the moment. I'll start with global and then cover off on New Zealand with the new government. With global shares, two things are going on at the moment. There's a lot of focus on tax cuts in the US and when and if they get passed. Our view remains there's a better than 50% better than even chance that tax cuts are passed. When it happens, who knows, it could be the end of the year or early next year, but from what we've seen so far, both in the US Congress, the House and the Senate have passed effectively resolutions enabling some form of tax cuts, and from here it's horse trading about where the spending is placed. So our view is that whilst markets have run pretty hard into this anticipation of tax cuts, we think ultimately that will be justified. If for some reason the tax cuts fall over, then you can guarantee that markets would be disappointed and you'd see some weakness if that occurred. But as I say, for now, we're reasonably comfortable that in its own way the US Congress is making the progress they need to. The second thing, and more important for how this next 2 or 3 years plays out for markets that we're watching very closely, is inflation. So the story for 2017 has been low inflation, lower than expected, in the United States particularly, but also around the world. We think this is likely to change. We see a number of one-offs that have held back inflation in the US, low oil prices, healthcare prices, and some of the things going on in the US property market. So heading into 2018, one of the things we'll watch very closely is whether inflation shows any signs of picking up. If it does, the Federal Reserve will be increasingly uncomfortable with having interest rates at still very low levels. So expect that to be one of the really important themes for 2018 and how markets behave next year. Now that's the world. Otherwise, we're reasonably happy with what we're seeing around the world, but those are two things to watch. In New Zealand, obviously we've had a change of government bedding themselves in and starting to roll out some of their early changes. What are we watching with the new government? The first and most important thing to keep an eye on is population policy. So this government came with a mandate to tighten up immigration laws. And interestingly, immigration has already shown signs of losing some momentum. Population growth has been a very important driver of growth in the New Zealand economy. And so the risk or the trick is going to be slowing population growth without causing a recession. And so for the next 3 to 6 months, the most important monthly statistic to watch in New Zealand is immigration, because if it slows sharply, which in the past it has done, the risk of New Zealand having a sharp slowdown in 2018 will increase. I think the other thing in the other area to watch with New Zealand is inflation to an extent here also. The Reserve Bank has had a very comfortable position being able to sit on low interest rates in New Zealand, but we are starting to see inflation perk up a little bit here as well. So how that plays out next year will be important for Reserve Bank behaviour. But the big thing we're watching in New Zealand is population against a market, an equity market that has run very well for 5 years, delivering almost 20% per annum returns. We are a little bit more cautious and have continued to encourage clients to be careful about how much exposure they have to this New Zealand equity market. Look, I'll finish here, but as always, feel free to pass on questions through your JBWere advisor. Thanks, and we'll talk again soon.